More than 1,000 families have called their insurance providers over the last week, and some of them didn't have the conversation they were expecting. Here's Denver 7's Russell Haythorne.
The stories of loss are heartbreaking.
It's awful, but you survive awful things.
Perhaps even more so for those like Joseph Reed, who believes his home was severely underinsured.
No one should have ever written such a badly underfunded policy.
Let's take a deeper dive by answering 4 major insurance questions arising after the catastrophic Marshall Fire. How do you know if your coverage is adequate? Replacement costs versus market value. Updating your policy based on upgrades to your home. And how FEMA can help fill the gaps. Let's start with making sure you have adequate coverage. Your best line of defense there, call your agent.
We all need to be checking in with our insurance professionals on at least an annual basis. How much do I have?
Experts say the Marshall Fire is a wake-up call to all homeowners and renters. Take an annual inventory.
Those days of saying I'm procrastinating my insurance, I'm procrastinating doing a home inventory of my stuff or talking to my insurance professional on an annual basis, those days really need to be gone, because as we've seen, the unthinkable can happen in a moment's notice.
Second, don't confuse your home's market value with replacement costs. Replacement costs tend to be lower in Colorado than market value.
Is what your insurance company cares about is not the market value or what you could sell your home for, which we know in Colorado is a lot these days.
Yes.
But the cost to repair and rebuild your home in today's dollars.
Most insurance companies write your policy based on replacement costs plus 20% or so for inflation and construction costs. Third, update your policy based on upgrades.
It's not that much more out of pocket. Don't cut corners on that. That is going to make all the difference to you in this recovery. If you've done additions during COVID, you tricked out the deck, those are all things that are going to be more expensive to repair and rebuild. Hey, it would cost me much more to replace this special tile that I got from Italy.
Fourth, FEMA coverage can help to fill some gaps, even though insurance is your primary recovery mechanism.
Go ahead and register, because that can cover deductibles under insurance. If you do find that you're underinsured or you don't have insurance, even if you're a renter, that's where that FEMA money kicks in as well.
Finally, Walker suggests patience. Sometimes insurance companies pay the depreciated value of your items now, then cut you another check for the difference when you go out and purchase things like a new TV or furniture.
People are always worried they're getting a check much lower than they know that their stuff is worth. I know there's a lot of fear. People are still reeling. We're only a week out.
Russell Haythorne, Denver 7.